Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's talk about something that drives traders absolutely crazy, getting faked out by the market. Today, we're going to break down a really powerful 5-step filter that's designed to stop you from getting caught in those frustrating traps. This is how you go from guesswork to trading like a pro. You know the feeling, right? We've all been there. You're watching the chart, your eyes are just glued to that key resistance level. You see the price push, and then, boom, it breaks through. The excitement is just pulsing. You're thinking, this is it, the rocket ship is taking off. So you slam that buy button, ready for the ride up. And then, the bottom just drops out. The market slams on the brakes, does a complete 180, and just plummets right back down, taking your money with it. That horrible, gut-wrenching feeling? That's not just bad luck. You, my friend, just got caught in a classic bull trap. So what's the difference? What separates the traders who fall for these traps over and over from the professionals who seem to just sidestep them? Well, I'll tell you, it is not some secret magical indicator. It's a process. It's about having a repeatable, disciplined filter for every single trade. And that is exactly what we're breaking down today. Think of this as the antidote. It's a professional's 5-step filter, a checklist you can literally run every trade idea through to separate the real, high-probability setups from all those dangerous fakes out there. So here it is, the whole framework: detection, confirmation, entry, stop loss, and target setting. Now, the most crucial part is this. A trade has to pass every single one of these 5 steps. If it fails even one, you walk away. You don't touch it. It's that simple. Let's dive into how this actually works, starting with the first 2 steps. And honestly, these are all about one simple, but really difficult idea: patience. See, professional trading isn't about being fast. It's about having the discipline to wait for that perfect setup to come to you. First things first, we have to change how we see these levels. A line of support or resistance? It's not just some line on a chart. It's a war zone. It's a point where a huge battle is being fought between the buyers, the bulls, and the sellers, the bears. And our job isn't to guess who's going to win. It's to wait until a clear victor emerges. And that brings us to step 1, detection. How do we even know a war zone is legit? Well, the rule is simple: a minimum of 3 distinct touches. You know, most traders are way too impatient. They see 2 little points and they draw a line. That's not enough evidence. That's just noise. Just burn this into your brain. 2 touches could be a total coincidence, but 3 touches, now that establishes a real, respected level. This tiny shift in thinking changes everything. You stop being a gambler, just hoping for a move, and you become a sniper, patiently waiting for the target to be clearly identified. Okay, now for step 2, confirmation. And listen up, because this is where almost everyone gets trapped. Take a look at the image on the left. You see that long wick that pokes through the line, but the main body of the candle actually closes back below it. That is a classic trap. They call it a liquidity grab, and it's designed to fool you. The only thing that counts, the only real confirmation, is what you see on the right, a solid candle body that closes firmly past that line. That proves someone is in control. Remember this: no close, no trade. Period. All right, so once we've got our patience locked down with detection and confirmation, we shift gears to the final 3 steps. And these are all about one thing: precision. This is where we execute the plan flawlessly, with 0 emotion and 0 hesitation. For step 3, our entry, we've basically got 2 options. There's the momentum entry for traders who want to jump in right away the second that confirmation candle closes. Then there's the retest entry, which is a bit more patient. You actually wait for the price to pull back to the line it just broke, kind of like a kiss goodbye before you enter. You know what? Both are perfectly valid. The key is to pick a style and stick with it. Consistency is everything here. Step 4 is your non-negotiable insurance policy: the stop loss. You know, a huge mistake so many traders make is putting their stop right on the line. Don't do that. You need what's called a margin of safety. Give it a little extra room to breathe. This protects you from all that random market noise. It's basically designed to hunt for obvious stops. If the price goes past that margin, hey, the setup was wrong, and you take a small managed loss. No big deal. And finally, step 5, setting our target. Before we even think about entering a trade, we have to know that the potential reward is worth the risk. The absolute bare minimum we should ever accept is a 1 to 2 risk to reward ratio. What that means is for every single dollar you risk, you stand to make at least 2. Why is this so important? Well, with that ratio, you can be wrong twice, right once, and you still break even. It's the mathematical edge that actually makes long-term profits possible. Anything less, it's just not worth your time or your capital. So where do you put that target? It's not based on wishful thinking or greed. It's based on the structure of the chart itself. You just look left. That's it. Find the next major support or resistance level, the next big wall. That area is like a magnet for price, and our plan is to get out of the trade before it gets there. Okay, let's wrap this all up. This isn't just a bunch of random tips, right? This is a complete unified system. I want you to think of this final checklist as, well, your new trading religion. So let's run through it one last time real quick. Number 1, detect a level with 3 or more touches. Number 2, confirm the break with a full candle body close. Number 3, enter using your chosen method, either momentum or retest. Number 4, set your stop loss with a margin of safety. And number 5, make sure your target gives you at least a 1 to 2 risk to reward ratio. And here is the most important rule of all, the one you can never forget. These steps are not optional. They work together as one single filter. If you miss one step, you miss the trade. No exceptions, no just this once. This discipline is what will protect your capital in the long run. So as you go to look at your next setup, I want you to stop and ask yourself one simple question. Is what you're about to do a gamble based on excitement and hope, or is it the result of a disciplined, repeatable process? Honestly, the answer to that question will define your entire trading journey.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.